our stock of the day is Metcash, supply, wholesaler and food, liquor, hardware, with the independent retail stores including IGA, Mitre 10, Celebrations. It's reported an 18.5% lift in its full year profits, hitting just shy of $300 million, as it sees further improvement in the competitiveness of its retail networks. IGA stores, in fact, grabbing further market share from its rivals, its big rivals, Coles and Woolies. Yeah, we're going to be discussing Coles shortly. Looking ahead, the company is seeing uncertainty around consumer behaviour as inflation remains elevated and pandemic-related issues continue to put strain on its supply chain. So what do our experts think of Metcash? Mathan?
Oh, look, I think the whole supermarket sector is going to do well. They're one of the beneficiaries out of the inflation cycle. We've been long Woolworths and the split out Endeavour. Both of them are doing well. I think Metcash has been one of those ones where they made a great acquisition that's played out and it's done relatively well. But it's a thematic for the whole sector. Everyone's doing well. Coles will be a tricky one for me. I think it'll probably be the laggard out of the lot because Woolies is a really good play. So I think Coles will probably be the laggard. But in saying that, everyone in the sector is doing well. Metcash has just reconfirmed what we think. Basically, they don't care what the price is because they keep their margin and they pass it on to the customers. And as customers, we're trying to get the cheapest thing. So we're trying to, a bit more of us are moving around trying to find the cheapest lettuce that we can find. But at the end of the day, these guys are, this is what I love about the traders who sit in the middle. They clip the ticket. It doesn't matter what the price is. They get their margin, everyone else pays up. So in that context, I think they continue to do well. And I think the retail is moving from discretionary to more staple. So you've got to favour those guys over the next couple of years. And I think that cycle is playing out now. So I'm more than comfortable with Woolworths and Endeavour. Metcash is doing relatively well, good update. The other thing to remember in this reporting season is we're going into a choppy couple of months. Anyone who comes out with the upgrade cycle will benefit from the fact that, well, if you've got a stock that is uncertain, the guy who has given the positive update will get the inflow. People will sell out of the risky one and go to this one because it's going to hold up through that next couple of months. So Metcash coming out with a good result right now is a really good, indicator for the stock to do well over the next couple of months.
Okay. So what's your recommendation?
Oh, look, I'm a buyer of the whole sector.
Okay.
Still prefer Woolies and Endeavour, but look, I think Metcash is a buy.
Okay. Carl, what do you see?
Look, I like Metcash. It's been our pick of the supermarket sector for the last 12 months now. But you do have to understand its reward risk. And look, I think it's got the best growth profile, obviously, with the hardware aspect, the liquor still within the business. But it's riskier because, it's the number 3. So if you own Metcash, you probably would like to own a Bendigo Bank or a Bank of Queensland or something like that. So, look, it's got the best yield out of the 3 as well. So the fairest valuation, we think it's the cheapest of those. And, today's result kind of just reaffirms a lot of the stuff that we were thinking about it, that there is this structural shift towards your smaller players. So, we went in there because of COVID and a lot of us are hanging around, realising that, going down the road is probably, walking down the road is better than driving down to the local shop. So everything Mathan said, I agree with in terms of where the business is at, the momentum of the business and the fact that really they're not too fussed by inflation. They're just going to pass that on anyway. So the technicals is where maybe Metcash is not as ideal. I think the chart is solid, don't get me wrong. It's the best chart out of them, but it's not necessarily a chart that I look at and go, hey, out of everything on the market, that's a screaming buy. So I think it suits your defensive investor, it suits your income investor, it suits somebody maybe looking to fill that spot in that supermarket space, okay, in that staples space. So if you're that person, I'm happy to stick with it. Look, our fair value target was 448. So today's pops brought it back up to that. So I can't go a buy, but I think it's a solid hold based upon the fundamentals and the chart. It's just, if you're the growth investor, it's not that one stock you look at out of everything in the market and go, well, that's what I need to buy today.
Yep. Okay. So I'll hold there for you for Metcash.